Good afternoon, everyone. BC Richfield here, coming to you live from London. It is pretty much exactly midday today, which makes it just a minute past 1100 UTC. A big shout out to everybody joining the stream live today. You can see absolutely loads of you in the chat. Legends, one and all. Welcome to everybody that's new, and also to the real old school crew that's in here. Nip Pa, good morning, happy Wednesday, everyone. MM as well. Erica, hey Erica, how you doing? Hans, my man. Craig, good man. Hope we're not disturbing your work too much, mate. And obviously our lovely Kelly Barker all the way from New Zealand as well. How are we doing, everyone? Awesome to be with you. Again, cannot believe how quickly the weeks are just melting away. It was seemed like 5 minutes ago we were here on our live show on Monday. Lunch with the right people. That's brilliant. That would make the name. Nip, I'm going to write this down, right? I will credit this to you if I ever use it. But lunch with the right people sounds to me like it would make an amazing podcast. I'm actually writing that down, mate. If I ever use it, it's coming your way. Mert, hello, buddy. Great to have you on here. So, guys, look, I really, really want to just make this as valuable as possible for the next hour, right? So, what's hot? What's on your mind? What are you thinking of? What alts are kicking about? I've been testing a lot of new strategies on NASDAQ that I'm really excited to share with you guys, hopefully in the next kind of month or so. But I thought today we could really just steam in and just kind of take a look at some charts. Yeah, Hans comes up with a good point. Can't wait to trade the shit out of this market. Unfortunately, news also today. Yeah, absolutely. So let's get up our news calendar. Actually, do you know what? Let me share this with you guys quickly. It's something I don't think that a lot of people cover, but actually it's really, really important, or can be really important. And the reason that I say that is because I don't want to give this idea. People can become over distracted by news, right? So you have to always use it with context. Whack, hey buddy. Yes, Hans, I know you love your traditional markets. Like, yeah, I'm becoming much more. I'm getting my systems much more in line with them. I used to trade them a lot many, many years ago, using a lot of moving average strategies. And actually, when the Nest approached me, or I came to work with the Nest, that was one of the things they were really interested in. But I spent a lot of my career doing low time frame scalping, a lot of stuff built around sort of my ICT's principles. For those of you who don't know, as part of his core mentorship, the original one a long time ago, and also SZ as well. I was very fortunate to know a lot of him over the years, as well as some other amazing traders, working really closely with Burb, the team we've got over at TBN, which are just exceptional. In fact, this month, guys, really, really excitingly, and I'll share this, hopefully you're going to share this on Twitter and that soon as well, because I keep saying to the guys over there, we need to share this more. We print and report our trading stats every month, and this month we got a 73% win rate. I think cumulative R on our legacy calls this month alone has been 300%, and I think you're approaching 400 to 500% on the crypto. So it's been really, really good, and the whole team have done an amazing job. So if any of that is of interest to you, I'm not here to give you a hard sell on anything. People have different ways of learning, but if you want to be part of a community like that, you can join for free. There's loads of offers and bits and pieces coming up, so do keep an eye out. So before I keep rambling on even more, let's just take a quick look at the questions, and then we're just going to take a really quick look at the news, all right? So any thoughts on the Russell against the NASDAQ when you have a moment, mate? Okay, yeah, do you know what? I don't actually trade the Russell, but I just trade NASDAQ and ES in terms of equities. I don't go near Dow Jones, the Russell Index. I mean, they're basically just different baskets of assets, right? But sure, I mean, we can definitely take a look at that in terms of what you mean, how it's kind of weighted up against there. The other thing you can do, guys, as well, if you're trading different equities against one another, mainly with, Dow Jones, NASDAQ and ES, is you can get these free indicators called SMT divergences, and it can show you when there's key divergences between the different ones. And if you line the three charts up, so you have them horizontally, one stacked above the other, you can see the weakness and strength in some. So you can see the stronger assets often fail to sweep a low when the others do. You wait for the recovery of market structure and then back the stronger horse, which is a good way to trade. But, digressing again, I'll take a look at that a little bit later. Erica, what are the things to consider when trading FX? Or in a previous room, you've mentioned the spread when you're setting your stop loss. Yeah, I mean, it can be really, really brutal. It's a really good point, though, right? So let's just cover that very quickly after this because I think it puts a lot of people off traditional markets like that. And actually, I think, our systems and that can be so well set up for those markets. But there are little kind of intricacies to them, like news has a huge effect on FX, right? The whole currency markets are massively driven by news events, everything from, in crypto, probably I would say the deepest most people dive into it is looking for sort of an FOMC announcement, right? And even still, I'm not sure most people really understand what that means. But basically, you've got to take into account inflation data. You've got to take into account what the countries are doing. Interest rates, obviously, which are a massive thing. The more the squeeze is getting put on the average person, the less money they have to spend, the less they can speculate, right? And that is when we see a lot of money rushing into the dollar because it's the world reserve currency and really seen as a safe haven. But I'll definitely put a couple of bits across there as well. But yeah, definitely news, which is absolutely huge. The time of day that you're trading as well. There's things called OTC, which is over the counter, meaning that basically market makers can just really, really mess you up if you get into the wrong times. Earnings is massive. Also taking into account the time of day, right? Like on a Friday, for example, you want to be making sure that that you're sitting there and you're looking at the charts and saying, like, okay, you've got to remember a lot of institutions don't want to hold positions through the weekend. You can gap up, down on a Monday. It can really, really put you in hot water. So quite often you see profit taking and that coming in on a Friday, or hedging starting to slip into the market. And the same with the months. You start coming to the monthly close, the quarterly close. These are all really, really, really big figures. And actually, for me, it was Trader SZ that was the first real exponent of this for me years and years ago, using monthly open, quarterly open, yearly open, things like that. And I remember saying to him about it. And he said it's really, really simple. It's just when you come into those periods, massive hedge funds, institutions, bits and pieces like that, they're looking to balance the books. They need to take profit, they need to balance, they need to maybe potentially hedge for longer term positions. So that's why we see sort of, these amazing traders. SZ does it as well. Trader Dank, good friend of mine, who's just a legend of a trader. He uses it, monthly open, weekly open, resume, people like that. Basically, similar to people that use volume on charts as well. I mean, like points of control. You're just looking for somewhere that you can get that and catalyze that reaction. Well, brilliant. She is on top form today, isn't she, Hans? Actually, you can tell she's hungry for the knowledge today. That is awesome. Yeah, and Hans makes a really good point here as well. DXY needs to be watched in correlation to that, because when you're trading FX, you are, especially obviously if you're trading dollar pairs or EU, then you want to be looking at that strength in the dollar. If the DXY is strong, then don't be fading dollar pairs. Dollar yen, dollar euro, cable, GBP, USD. So you have to paint a much more detailed picture for yourself. I mean, I just done a prop desk trading challenge with my good friend, or really more like family now, Bast, and some of our crew from TBN, which has been amazing. We had James 14, who was on here with us as well. Some other people I was really fortunate enough to meet. And we were doing some prop desk work and, really, 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 really did well. As a team, we were very profitable. In a really, really difficult market on a broker that had a huge spread, which I'll show you in a minute, right? But before I digress, let's quickly cover the news first. So what are we looking at today? 23rd of August. Now, as we can see down here, as crypto heads, there's not tons that really kind of blows us away in this early part of the information, right? However, if we're looking to trade currency pairs, then all of this Eurozone stuff that's flashing up is having an effect, right? And when we look at the red numbers coming down, you can typically kind of look at that, gauge it a little bit, and kind of say to yourself, all right, well, what's happening with the euro pairs? Yeah. So what we're going to do is, in a minute, we're going to especially focus on Euro USD, right? Euro JPY, Euro AUD. And the reason for that is because what we can also see is that Euro GBP can be a little bit off because we've got UK news today as well, right? So remember that in a moment, we're going to pop on the charts. We've seen this red folder news. We've seen the red print, meaning the numbers have come in below what they should have been or what they were projected to be. So all of a sudden, that's given us a heads up that we can switch our focus onto the euro pairs, especially against the dollar, which has been strong. Also JPY, we can look against CAD. And our expectation now, when we switch back to the charts in a moment, is that that's going to be red, is that those euro pairs are going to be down, and our play would have been to try and get involved in that. Now we're looking right now at the open US 7 a.m. And time, this will kind of play out a little bit, remembering as well that in FX that we're starting our day in London at 7 a.m., right? Same in New York, where with equity markets, we're starting that day, an hour and a half later. So to just finish up on this, right, look, we've got US S&P servicing, US S&P manufacturing, composite PMI flash coming up as well, and crude oil inventories later, right? These are from sort of 14:45. So it does present a slightly choppy window, right? Now, these aren't as big a ticket items as we would expect from, say, FOMC, but for those of you that are members over at the Nest, you'll see in Jay's amazing news report that he does every week that we've got the Jackson Hole is going on, or Jackson Hollow. I never remember which one that's called, which is a big event bringing together the political parties in the US, and they typically speak. So you get the Fed speakers coming out, and that can start to move things, as we can see here. Yeah. So starting tomorrow, 5 a.m. Jackson Hole Symposium. That's something we want to be really, really aware of tomorrow. So how would I frame today? I would frame today in wanting to take what we would look at as like silver bullet type entries. Okay, that means that equity market wise, kind of looking to get involved in that between 1:30 and 2 o'clock. So looking for the highs and lows that have been set before 2 p.m. That's London time. And then looking for how they can be run and mean reversion trades. So we're going to take a look at that as well. So apologies if that was dull for anyone, but certainly if you're going to be looking at the FX markets, that is really, really, really key. So let's switch back to our chart, shall we? And let's very quickly look at two things. Let's just cover what we were just discussing with Erica there. So let's take a look at the euro pairs, and then let's just very quickly look at the spread. All right. If this isn't for you, apologies, but we really won't be too long on this point. And then while we're doing this, Craig, yeah, Eth, absolutely, mate. I was just about to say, while we're doing this, fire in your alt requests, and then we'll rip through the charts and see if we can find some setups, okay? But first and foremost, if you can just take a look down this side for me on our Forex, right? Euro USD down, right? Remember what we said? Now, if we go down to here, remember we said we're ignoring Euro GBP, yeah? Because GBP news out today as well, they can conflict. GBP's been quite weak, so it's not surprised to see the euro strong against that. But let's look at the other pairs. Euro Australian dollar down, Euro JPY down, right? So we can see and we can immediately get that feel of how impactful the news events are on the market. WAC, BC, what would you recommend as a beginner into FX? I've never traded or thought about it. First steps. Great. I mean, all I would say is just get your systems that you're using on crypto, right? And then just overlay it onto FX. Yeah, I really like GBP USD. I feel like I have a decent handle on the GBP news and the USD news, so that kind of comes in. Euro USD really kicks my ass. I don't know why. I'm probably just mildly profitable on that pair overall. CAD JPY and CAD CHF took me for an absolute ride during the contest. And I realised I just don't know enough about them from a news-driven perspective. So what I would say is, Euro GBP USD, Euro USD, Euro GBP, things like that, really kind of strong, consistent pairs. Yeah. So I think the key thing is just overlay your systems on that and just back test the living heck out of it. That's definitely the best way to go, I would say. Now, if we just very quickly look at something like GBP USD, one of the things that I was teaching on this recently. I just wonder if my markups are still on here. I'd imagine so, because it seems to be taking a while to load. I think, by the way, guys, so TradingView, I did message TradingView about these kind of technical issues. They did say that they're having a few problems at the moment. But I think as we've kind of stepped into the hotter weather here, that actually might just be the processors on my computer. They're running sort of three big screens with, sometimes 4 charts on each screen. Apparently that is it's an excessive amount of capacity. So I'm going to look to get another setup out there. But just to quickly again, before I diverge, then what we can see on here, see these red and green lines, these are my trend lines. What I'm doing is I'm basing these lines off of high time frame TA. Yeah. So if we just scroll to the left here, what you will notice is very soon we get a big fat line. See this big fat red line? That for me is when the market has turned bearish on a daily scale. Yeah, so we can see it didn't really lead us too far wrong along here. I tell you what as well, I remember this short here. right? And just thinking at the end of just thinking, God, I wish I'd held that. As the price just absolutely tanked, right? You can see, like normal, we come into a period of consolidation, and then now when the smaller red and green lines represent our 4 hour bias. All right. So as we kind of covered on the last live show in terms of how we make or how I'm kind of implementing that bias, I'm basing it very much on our fair value gaps, right? And what I want to see is I want to see either, if I'm bearish, I want to see bearish fair value gaps being respected. If I'm bullish, I want to see bullish fair value gaps and order blocks being respected, right? So just to give that some context, the reason that this green line flipped bullish here is because from down here, we've got this bearish fair value gap, right? Yeah. We also inverse this. So as we can see here, when this closes underneath the inverse, right, this is just 1 over. We would move this to here, right? Because once we've closed under this with this candle here, the assumption is always that we reach for the liquidity below the next clear and obvious low. Ultimately, we took out liquidity below here, yeah? But we can see once we've turned bearish here, the reason that we then turn bullish here is for the reverse reason, right? Bearish fair value gap, this closed above. The expectation is that price now reaches up. First, we've got here this high, which was untapped at the time, and then ultimately to this, which we didn't quite get to. But that's how I'm kind of basing my intraday bias, especially if I don't have a really, really clean read on trend. Whilst the daily trend is still bearish, I will obviously respect bearish setups more than bullish ones. And what I mean by that is, so say we've gone bullish here, right? Is my target this high? No. And I'll tell you why. It might be as we go up, but because we've got an overall bearish high time frame bias, if I get a bullish setup on a lower time frame, yeah, with confirmation, then I'm targeting internal highs, meaning that my first target would be here, yeah. Then I'm looking to this order block past this fair value gap. I don't expect price to take out an old high because it's hunting lows, yeah, because we're overall in a bearish structure. All right. So I hope that wasn't too boring, guys. I just thought it might give you an interesting take on it. Oh, actually, and let me just show you a couple of things very quickly, right? Just regarding the spread. And this is where it's very, very particular what broker that you're working with, right? So we can see here this was a short setup. Okay, that one must have slipped past my setup grouping absolutely. But anyway, it doesn't matter. I can explain the reasoning behind it, and it's good to see these live ones as well. This was our bullish fair value gap, right? This was supporting price. So at the start of our session here, which is midday here, which is the start of the New York session for me, then I want to see this held. And before this occurred, I wanted to see a bounce here, a recovery of market structure, and price to go bullish, right? Now we can see we didn't get the overall 4 hour trigger until here, but it doesn't mean that I won't take trades if I get my setups. Yeah. This is just dictating the overall bias. For me, I would just scale my position size down here. Yeah, because I know I'm going against the trend. But what have we got? Strong close below a 4 hour inverted fair value gap. We've now retested this here. We can see clearly that this is offering resistance. Yeah. So what I was doing with this and my trigger mechanisms with Forex is a little bit different to what it is with crypto. But let me just show you very quickly. So I'm looking for the sweep of a high or low, and I'm looking for fractal highs and lows, meaning that for a low to be valid, I need this candle that sets the low to not overtake the prior candle's high, and then I need that candle's high to be closed above, right? It's something that's been done in a much more mechanical way, so it can be coded into an algorithmic system at some point, right? But when this candle's low is broken, and why is this the fractal low? Because it met the criteria we just discussed. When that's broken, this candle, yeah, becomes the structure shift candle. When we see that structure shift, we target the highest fair value gap within it. Highest fair value gap is here. See this little slither of a one here? Right, now, let's just say for argument's sake, our target is here. Yeah? Now, I think we probably would have just been tagged in on this one. If not, we were definitely tagged in on this one. Yeah. So then I'm looking for the prior high above this, yeah, because I also need to factor in this small fair value gap here in case price runs a little bit hotter. Now, to give you an indication, and let's just say that this here was our overall target, yeah. So now we're out of the trade. It's a 5R trade. Now, on some exchanges, you can have a 20-point spread, yeah. So let me just draw a quick line in here to show you where our actual, because we always go a few points above, yeah. So that black line, let's do that double thick, right? That's our actual entry if we didn't account for the spread, and we've got a 5.16R. Yeah, let's see if I can just draw that in quickly. So 5.16. Yeah. So that's our risk to reward with our stop loss here. Now, I need to make an allowance for the spread. Some of the spreads that you will trade with, or especially on some of the not worse, but some of the more aggressive brokers also on some of the funding challenges, the spread on GBP USD at the moment is 20 points, right? So you see this number up here, 0.00043. Yeah, we need that to be 63. Yeah. So now you can see that allowing for the spread, that means we still get stopped out of the black line. But when you see on traditional setups like MT4, MT5, you have a bid and an ask price. The difference between those is what your spread is, meaning that there's two lines working their way up and down the chart, and the top one hits this, yeah, it takes you out. So you need to always add that on. Now, remembering as well that we need to make an allowance for a 20-point spread differential at the low of the trade for where that gets tagged out to be on the safe side. So now we've got a 3.2R trade instead of a 5.16R trade. All right. So that really, really, certainly in my opinion, that's really, really big. And they're the considerations that you have to bring in. So what I would say is with FX, be very conscious of the news events, be very conscious of the spread. Yeah. And if you're going to do one of the funding challenges, make sure you understand deeply, look at the reviews of the sites. Some of them are an absolute con. Some of them are very, very good. Some of them you work and grind yourself away and you never get a payout. And it's just devastating, right? Learning, my friend, welcome. Well, I do a really, really quick review talking about the spread differential on FX versus crypto. And what we're saying is that our trade that we set up when that was our target down here, because of the 20-point spread, we need to bring it back to here to make an allowance for that. When our stop loss was here, we had to make an allowance for the 20-point spread to be here. Yeah. And that meant that we ended up with a 3.2R trade. Originally, it was 5.16. Yeah. So then when you look at it, you can really, really get chopped up. You have a great day as well, my friend, learning. So we've still got a bit of the session to go. So if you've got any alt requests or anything, please do let me know and we'll take a look. But I did just want to cover that. I know we've got a few people here interested in FX. And also, I do plan to do some live FX trading sessions soon. We've made it through to the second phase of this big FX trading competition, or kind of trading competition. We're working with a hedge fund to do it, but there'll be a lot more information on it soon. So I'm really hoping to bring some of these live sessions to you. In fact, I'm considering on a Tuesday, Wednesday, and Thursday every week just doing like a New York afternoon trading session, so people can kind of dip in and out to voice chat or live or whatever they want. Erica, you're very welcome. And remember, you can always reach out to me on Twitter or through the Nest if you've got any more questions. All right. So let's feed the degens and everyone, shall we? Let's get ourselves. Nick, BC, what exchange are you using? Happy with? Very much country dependent, mate. I used to use Pepperstone over here. I thought they were very good. At the moment, I'm doing all of my work through a private hedge fund, so they set up the different. They set all of that side up. Basically, we plug in directly through their interface using MT4 and trade with that. But what I would say is just go on Google and type in something like. Best prop desk challenges or best funded challenges or best FX trading companies for spread and then your country and 2023. Yeah. And what you'll do is you'll have these amazing FX articles. There's so much more information in the public domain for FX trading. And you'll just normally get a list of like 4 or 5 of the brokers. They'll tell you what the spread is, what the access to pairs are. Some of them you can trade crypto CFDs as well. So it doesn't take that off the table either. But again, what I would say is, get yourself lots and lots of backtesting practice. All right. That's the really, really the best bit of advice I can give, whatever you're trading, but especially when you're moving from something like crypto to equity markets or crypto to FX. My transition to equity was quite good. I like trading NASDAQ, although I haven't been doing it for a fair while. My focus has been on crypto, but it was a really, really different dynamic going into FX. So I would really, really recommend that to anyone. I would say just really, really get your homework in. So I just quickly flicked over onto ETH. Yeah, as far as I can remember, that's the only one I've seen. Guys, if I've missed anyone's out, please do shout it out for me. But we'll start with ETH. One of the interesting things about ETH that we can see on the screen at the moment is when we looked at, say, the 1 minute chart on GBP USD, you could see that the candles weren't looking quite as skinny, if you like, or certainly not quite as, look at these really big upside wicks. Look at how they're all, Trading Views kicked me out again, 1 second. But look how we had those really long upside wicks, right? And how they were all kind of cut off at an exact level. SUI, certainly, mate. And how they were all cut at a certain level, right? It just doesn't look overly natural, does it? Right? It looks very kind of mechanical. It looks very computerized, right? And there's a reason for that, and that's because it's illiquid, right? So when we look at equity markets, for example, we can see that you've got a lot. SDEX as well. Is that SmartDex? Is it? I think it is. We've been partnered with SmartDex for a little. A really, really, really good company. So let's hide all of the recent jazz, shall we? Make a quick group of that. And then let's look at everything top down. Right, let's share this screen with you guys again. Hopefully that is the last little tweak. Yes, Craigie boy, nothing gets past you, mate. No, good lad. It was TradingView just kicked me out again, so I just done a reset. Now, this is what I was talking about these abnormal lines, right? Look at this. It just looks like someone just look at them all stopped on that perfect line. Right, that one has their 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, just all on this exact line of 1649.46. It's just that's when you can just see, algorithms, computer systems, bits and pieces just really having a little bit of fun, right? So let's take a look top down and see what we got. So, okay, interesting. This has worked out quite well. So this was I love this. That's hilarious. Sometimes you draw these things, right, before you get them play out and you just look like you're a million miles away. And sometimes they just make you look like an absolute boss. This was not really predicted to be that high. We were just talking about this consolidation, manipulation, expansion, right? Just purely coincidence it stopped up here. Unless we might have adjusted it on a previous session. But because it was about looking at the concept of the power of three, right? That we get the consolidation, market tricks you out one side, that's the manipulation before you get these aggressive runs that leaves everyone behind, and then everyone's down the pub draining their sorrow saying, did I tell you about that amazing trade that I took? Did you win? No, but I really had the TA spot on, because unfortunately, a lot of people will get in around here, see price starting to go up, holding on, price comes down, looks to rebalance this fair value gap, and then market makers, institutions, smart money drop price down into this pocket to generate the liquidity they need to fill the orders to fly up here. This then takes out a key high, and then basically when we look back here, we can see the sweep that we had on this high, and then the situation kind of rinses and repeats, although we didn't really get a clean kind of power of three here, certainly on a daily. So where are we? What's going on? And why is it all just such a mess at the moment? I still think that this event here was a little bit news driven. Yeah, anybody that reads the reports or keeps in touch with my YouTube, Twitter, or anything over at the Nest will know that I've been very vocal about expecting a drop down back into here recently. And as for why, because of these fair value gaps, right? Basically, it's almost identical on Bitcoin. But we had that fair value gap here and this fair value gap here on a daily scale. Overlaying this was a large weekly fair value gap. And my feeling was really clear, right? And on Bitcoin, even more so, we kind of came up into these highs here. Here we see the deviation, price comes below. Now, price has just been held at the equilibrium of this fair value gap for ages. Yeah, so just draw that in. Yeah, so see, we had a little body peak under it here, a tiny bit, but price ultimately is being respected, and we can see the green box offering support, support, support. Ultimately, we drop down, holding the red box, and then it's good night. This did happen Thursday. Thursday, we had the big news release about Evergrande, okay, which for those of you that don't know is a big Chinese real estate property developer. Just, I mean, humongously huge. I think they're possibly the biggest in the world, multi billion pound or billion dollar firm, and they filed for bankruptcy. This has been rolling on for a little while, but basically it's starting to come to a head now. And obviously, two things really. One is the news can be quite opaque in countries like China, with state controlled media. However, people that think that our news isn't hand delivered to us as well are probably a little bit mistaken. The West has its own biases with its news reports. So it's hard to get a real feel for it, but certainly based on how the market's reacted to it, I was quite surprised because I expected a bit more of it to be priced in, considering that it's been quiet common knowledge for quite a while now, but they obviously expected it to have a bit of a stronger recovery, and it hasn't. I think that put into here, unfortunately, as we see with crypto, it is a beta risk asset, meaning that it is going to get absolutely smashed to pieces when the risk off sentiment hits the market. And again, that's something that we typically tilt our hat towards the dollar. Yeah. Now, the correlation between the DXY and crypto has been pretty rubbish of late. Yeah. Especially with Bitcoin, it's kind of done what it wants. But there's no, the dollar has just been parabolically hot, right? So there's always going to make risky territory. So the plan was to find support down here, but actually looking at this leg here in terms of premium and discount, the reason I wanted to target down here was price coming down into a discount. Yeah, that's below the 50% range of this expansion leg. Yeah, and then that way it favors our long setups. Unfortunately, we can see as we came down here, we just had nothing but these kind of weak reactions. Yeah, see price diving in. Actually, something else I want to share with you guys today, which we'll just look at very closely, is I got introduced recently to an ICT trader called TT. I've got no affiliation with him, never even said, I've said maybe hello to him or something. I think we maybe follow each other on Twitter, but I think that's more coincidence than anything. But an old friend of mine, or a friend, I've never met him, but Tyler Durden, a really, really old school, fantastic trader on Twitter, and someone I used to watch back in the day. He taught me this concept, or I learned this from him a while ago, about bias on a daily scale. Yeah, and I find it really, really interesting. Now, crypto can be that much choppier, right? But a way that he used really, really well to establish bias, I'm sure it was him. I'm not sure if he ever watches the channel, but if he does, do let me know, Tyler. Is this. We're looking at each day, right? And let me just delete this very quickly. So, because a lot of people, the reason I go over this and the reason I focus on bias a lot on the channel is because a lot of people struggle with this massively, and it was a huge thing for me. Highs, lows, bias, getting that high time frame bias, melting that down into my intraday bias. That's what really changed the game for me. That's when I started to become consistent. That's when I started to become consistently profitable. And that's what gave me the confidence then to kind of go out and try and build new systems. So I just wanted to share this with you because I thought it was a really good and clean way to add kind of confluence to your bias. So for me, when we've come down here, yeah, I'm looking at this bearish fair value gap and this bearish order block here to suppress price. It does. So my bias remains bearish. I expect us to attack the lows and pull back to rebalance fair value gaps. So when we get down here, nothing's different, right? Until this candle here closes above. Then I'm looking, when that closes, to this fair value gap here, which is now bullish, sat within our inverted fair value gap, which this should now offer support. Then I'm looking for longs, yeah? And I stay long bias, respecting that, respecting the bullish fair value gap, yeah? Respecting it still. We get this little close below. When we come back above it here, we're bullish again, up into the highs, so on and so forth. But I understand that can be time consuming and a little bit convoluted for some. So what this guy TT has touched upon recently, I think is what Durden used to do as well. And we're just basing it on every day, right? So all we're doing is, see this candle's higher? Yeah. If we close above that candle's higher, yeah, the price opens, trades down, comes back, closes. We then expect the next day's high to be attacked as well. So see how the day opens and takes the high. Now notice how this candle closes underneath this high. Yeah? So we now expect the low of this day to be attacked. Yeah, does that make sense? So we're only trading this day now. We see price comes up, closes under this. When this day opens, our target becomes this low. Right? Now, notice how price closes back within this range. Now we expect this high to be attacked, which we can see it does. Right. However, see how it's attacked and then it closes back within. That means when this candle opens, we're expecting this low to be attacked. Now we can see we don't get that. But see how we get this close above it? Yeah? Close above this high. We're now expecting this candle to expand higher as well. Yeah? We can now see when this candle closes, it closes here, so we expect the low to be attacked. We can see here that the low does get attacked. Yeah, so it can just be a really, really easy way, because you don't have to use it as your overall, but you can always use it for a bit of confidence. So let's pan it into our current thinking on price and say, okay, what are we looking for here? So because we've got this chop in here, yeah, we've got a couple of things. For those of you that are either members and get the Bitcoin report that I release on a Sunday evening, will know that deviation, this is our mother bar, right? Deviation, mother bar low, coming back in the range, we expect expansion higher. However, we want to monitor that, which is absolutely fine. But if we're just looking at this now in terms of overlaying our daily bias, how we looked at that, first of all, overall bias, bearish. Yeah. So I'm going to mark out this low. I'm going to mark out this low. And I'm going to mark out this low. And I'm going to make that one a little bit thinner. Meaning that whilst, let me just get rid of these. This is on our daily scale, remember. We're still going to decant this down onto lower time frames. So here's our daily fair value gap. Draw that in grey. So quite simply, although we've had a run on key liquidity on the lows and price has really been bought up, we're now consolidating underneath this daily fair value gap, right? Our bias has to remain bearish, yeah? So just to signify that, I'm just going to put a little arrow up here, right? Meaning that now, as we come into today, what's happened? We can see that price took that low and closed underneath it, yeah? Meaning that today, we expect price to trade lower. Draw that back to here. All right, so our expectation now for today actually is that this low gets attacked. Now, we don't know if that's definitely going to be the case or not. We're just kind of building our picture. Now, what we want to do in order to build the picture and gain a greater understanding of it is then drop to our 4 hour. Now, on the 4 hour, we can see a couple of things, right? First of all, we're respecting this fair value gap. And as it stands, we're actually, I'd say we're a smidge above this actually. Now, normally you want to see a slightly stronger close than this. You'll hear me talking about inverting these fair value gaps. This is, by all intents and purposes, an inverted fair value gap because we've got a 4 hour close above it. The other thing that plays into this is we've had this rejection here off of the H4 fair value gap as well. So our kind of daily bias being bearish here is starting to kind of hold some context. So this is a little bit muddy at the moment because if this holds, price could easily push up searching for higher prices. Yeah. If that is the case, I'd be looking at this 4 hour order block. Okay. Actually, I don't know why I've done it round that way, actually. Sorry, I just tweaked my OCD. If not, OBH4. We can see we've got this kind of cluster of bearishness, if you like, above us. Our high time frame bias is bearish, is in our daily. Based on structure, based on our inverse fair value gaps, our fair value gaps, price, where price is delivering from. Yeah, so when you hear me use that term, It's this price currently delivering from this bearish fair value gap, right? And it's now being supported by this inverse fair value gap. A close back below this, and my first target, which I'll just take a look at on a lower time frame. The first target we want to be aware of is our low of day. Okay, so this is just going to be lined up as LOD. Now, as we put onto here, we can start adding in some really important context. It's 12:41, right? Now, I like taking these trades typically past sort of 1:30 p.m. our time. That's when equity markets in New York are aligned, right? See that little spike up there? We can see it starting to find a bit of support. So now we're just continuing our TA. What are we doing on an hourly scale, right? So this is our hourly fair value gap, right? Is everybody following along so far, or this just sounds like the ramblings of a madman? Right. So what we'll notice is that we've decanted down onto these time frames. Now, am I willing to take counter trend trades? I absolutely am. Do I have parameters and rules for that? Absolutely. Yeah. So the parameters and rules for that is if I'm countering the high time frame trend, awesome. Thanks, Craigie boy. Then I'm doing it with a smaller position size. Yeah. So normally, if my risk is say 2% of my account, I'll drop it to like 1%. Why? Because I know I'm going against the master trend. Yeah. The master trend is bearish. I know we're holding this currently on the 4 hour. So what does it tell me? It tells me that if we just slip back to our 4 hour quickly, we've got 17 minutes. Yeah. Now, if this is our 4 hour candle and we get a close below here like that, yeah, so it closes under, does two things. One, we get that completely violated again. So that, which was supposed to be there, it's closed above, it closes back down beneath it. Take that as invalid. And then my expectation is we're searching out prices lower down. On an hourly scale as well, yeah, we've got this bullish fair value gap here, which we've identified. Let me just do that a little bit darker for you guys. Right? So now, if the candle closes like this, let's get rid of that. If we get a candle close below here, then my expectation is we go for low of day just past this hourly swing low here as well. Yeah, so we'll just draw that out. Oh, I like that, Hans. We'll take a look at that in a minute. USD CAD. Lovely. That spent a short while kicking my ass as well last few weeks in the prop desk. You have to. So what I realised the allowance I wasn't making was for all the Canadian news releases, right? Which, as much as people, the US news releases obviously affect Canada, but the Bank of Canada ones, bits and pieces like that as well, which I wasn't factoring in. I was basically missing these news releases, getting into these trades, and then just getting slaughtered. Craig, if we break below the low of day and we don't have any recent fair value gap, how far do you go back on fair value gaps? So, okay, so if we broke below low of day here, yeah, how I'd be looking to trade this is just looking at, so liquidity and then dynamics are two slightly different things, how I'll look at them, yeah? So down here, we have a clear low. The low of day is also a clear low. Prior day's high and prior day's low are also key areas that I'm looking for sweeps, yeah? Meaning that even if there's no fair value gap up here, if our high time frame bias is bearish, yeah? And let's just say that this was, actually, let's use your low of day example, yeah? So even though I'm bearish, if low of day sells off, yeah, runs here, comes back in, and then we recover market structure, then what I would look to do is I would look to trade it up to a key internal target. So that means that I wouldn't expect this high or this order block necessarily to be reached, but I would look for this fair value gap, because if we close below this, it becomes an inverse fair value gap. If we run this low of day and we recover, it's showing that the market has a bit of strength in it. And what we're doing is we're playing that corrective move, yeah, back to a key target where we believe there's liquidity resting. Ultimately, if you're looking like really, really far back for fair value gaps and stuff like that, you're probably going to be missing these clean kind of highs and lows. Because one thing you can do on any asset pair to see how to see the reactions at that is you can get this little indicator. It's called previous day high and low, right? So let's just go to a bit of clean price action for a second. Now, what I like to do with this is I have my high time frame bias, so we know on a daily scale this has been bearish for quite a while. Yeah. So whenever you step into the day, let's just use this as an example. What I'm saying to myself is I'm always going to respect my high time frame bias. Yeah. So I wait in my New York session, which we can see starts here. Remembering if that's on FX, we want to move this an hour and a half later from 7 a.m. to 8:30. This is New York time on this indicator, by the way. Right, and now we can see that this blue line here starts at 1:30. So what I'm looking for is I'm looking for key highs and lows set before this session starts. And what we can see here is we have this high here, but we also have these highs along here, and we've now got this newly formed one, right? So I'm going to take the cleanest and closest high, which we can see is here. Okay, I'm waiting for a run on that high. I then need a low, swing low, which I'd be looking for in here. I typically trade this on a 5 minute as well, guys. And it depends what you classify as a swing high or low, whether you're using fractal patterns or whether you're looking at this. So for me, unless I'm using fractal highs and lows, this is my low because it's flanked by two higher lows. Yeah, forms that point. It's a 3 candle pattern, the same way that this is our high because it's flanked by two lower highs. So we have a break of that. Yeah. And now we can do a few different things. We can use the MSS candle entry. If this was obviously a 5 minute, we would look to open up that candle, pop onto here, go onto here. Now, normally you would be a 5 minute candle that you would look at for this. I know we've got a 15 minute one drawn out here, but typically the price action will be similar. Where's our fair value gap? It's in here. If you have multiple fair value gaps, you can just compound entry. So you can identify this one. Why this one? Because within this box, we're definitely at the 50% mark there. So this is the fair value gap. We could also make an allowance for this one up here. We ultimately tag ourselves in here. Our stops would have to go above this high or this one actually, because it's got a small fair value gap in here. And then we would look to just trade this down to clear and obvious liquidity, of which I would probably be targeting that there. Yeah. So in terms of that, I know it's a bit convoluted, that description, Craigie boy. But it's not for me kind of always looking about how deep I can get into those fair value gaps. I'm looking for liquidity versus kind of dynamics. So, with this, if I'm bearish, well, once you come into the London session, I'm just looking for a higher to be swept. Once I have a breakdown with displacement, remembering that we've got our fair value gaps now move lower, then that's when we can target the move. However, let's just see if we've got a different example here. So start of our New York session is here. We see we sweat these highs. Breakdown. There's our displacement. There's our fill. Price sells off. Now, to be honest, I'm trying to find one that doesn't work. Sometimes you can just hit these patches of data when they work exceptionally well. But really, you want to find the ones that don't. And in truth, on these assets at the moment, we're a little bit spoiled because we've been in this kind of quite powerful downtrend, right? But this is a good example. See here, price comes in and takes the prior day's low. Now, for me, with key liquidity being taken, I'm not looking to go short here. Also, structure sucks. We're already in a downtrend. So my expectation here is that price is actually going to rip a bit higher to take liquidity above these highs. So if I had a bit more room to play with here, once we've broken this, you look for a sweep of prior day's low. Here's your high. You look for displacement above it. We don't get our entry because it doesn't pull back far enough. But that's the principle. So if that's something that you're interested in or something you struggle with, what I would suggest to everyone is go onto your charts, right? And then put it on, say, like a 15 minute. Get your daily and 4 hour high time frame bias. So like I said, whether you're using the fair value gaps and bits and pieces and structure, and just go back and say to yourself, okay, well, look, if let's say we're bearish from here, well, here's our sweep of the highs. It's our first sweep within the New York session at 1:30. Let me know if you need me to zoom in a bit more, actually, guys. We've taken out liquidity above all these highs here, yeah. Ping, taken out key liquidity. There's our displacement down. We trade it lower, okay. Then we come into this day here. What do? We get a sweep of the high of day. Remember, that's the other thing we mark out. Sweep of high of day, breakdown, retest here. Why would we enter here? Because we haven't taken the resting liquidity. We've got these lows here, which are the prior day's low. We enter here, targeting here. Now, with this one, we get the same setup, sweep, high, low. So great, we're on a real kind of winning streak at the moment. This one here, maybe that gets taken out at break even. However, before we get the sweep of the high in this session, which we just looked at, we see we engage with the low. So what we can do is we can set a counter trend trade. We certainly keeps us out of taking a short here, but we can also counter trend this, saying, okay, we believe that these are going to be attacked, or the high of day, yeah, or maybe even higher. Then you're still in the New York session. What do we have here? Sweep of the high. We would look for a market structure breakdown on our 5-minute, trade it back down lower. All right, always maintaining our bias. New York session, short trade, right? New York session, short trade. Now, why would I not be short here? I know we're just outside of the New York session, but I'm not going to be short here if we dropped outside of it because we've run this low. Now, my problem here is we've taken key liquidity, we've taken liquidity below this low, below this, which is the prior day's low. So for me, we've expelled, or we've expended a lot of our energy going lower. All right, guys. So I hope that makes sense for now. So I've got SUI, SDEX, Smart Dex, and USD CAD. Let's just take a very quick look at USD CAD because this one could just be moving at the moment, and then we're going to go back and we'll finish up on SUI and Smart Dex as well. So using exactly what we just talked about here, and Hans was in here with the alpha earlier. Look, 1243, saying looking good for a long. Yep, I can see exactly why. Let's just quickly take a look at our bias on this asset, shall we? So daily is extremely bullish. And we can see here, same principle, right? This is from back in the funded challenge. We got close above this daily fair value gap, bearish one, yeah, which we did with this one down here as well. This was just pure bullish price action up to this high, which we highlighted. What happened? Strong close above this high. Price dipped down into here, found support, now trading higher. So ultimately, where do we think price is reaching for? Probably these relative equal highs over here. So we lock that. And now we're in here, we say to ourselves, okay, well, what's being respected on a daily scale? Yeah. Our last order block is all the way down here. Fair value gaps are certainly getting respected. So when we're in the buy side of the curve, yeah, this being the sell side, yeah. So you would look at it like this. And again, always recommend going, to the source with like ICT for this kind of stuff as well, and then kind of learn those principles and then look to kind of implement them yourself. So that's the sell side of the curve, which would be red, meaning that we have our smart money reversal here, distribution, sell off down to the lows, redistribution, smart money reversal, accumulation, reaccumulation in here probably with this order block, and then expansion. So as we're looking to these highs, yeah, this becomes our buy side of the curve. And when we're on the buy side of the curve, I'm more concerned with what's going on with the bullish fair value gaps, yeah? So I'm not looking too much over here to the left, because otherwise you can always find something, yeah? So once we've confirmed bullish structure, that's how I'm looking at it, all right? So where are we? Not tons on there, but we know that we're bullish on a daily scale, yeah? So bullish on a daily scale. How are we looking today? Well, pretty damn bullish as well, right? So first things first, what are we respecting? I'll just do this in green, guys, so that it stands out a bit clearer for you, yeah? So green is our bullish fair value gaps. We'll do the bearish ones in red. So what are we delivering from? Bullish fair value gap. My only concern at the moment is we've just hit this liquidity here, which was like prior day's high, and we've taken out this liquidity here as well, okay? So if we look at that, draw both of those in there, and we say to ourselves, right, let's drop down to our hourly. And actually, once again, and do you know what? I noticed this so much actually with FX, is that we get a lot of these setups in London, right? So if we take this back to London, We had our clear upside target prior day's high and these two resting targets here, right? It was literally absolutely perfect, this setup. Yeah. So when we look in here, what do we have? We want to see price sweep a low. We get our sweep. What do we then want to see? We want to see a break of structure with displacement. Yeah. That was our break of structure. Yeah. Higher, higher low, boom, higher, higher. Literally could not have presented a crisper, cleaner fair value gap to take an entry from. Long position here, stops under here. Now remember, I'm going to just run this through you once again. So this is our target, first target anyway. Lovely 2.97 trade. However, this is at 71. We need to move this to 91, yeah, to allow for the 20-point spread. That's what we had on the broker that we were using. It was particularly penile because of the nature of the challenge. We can see it takes it from almost 3R down to a 2.3. However, if we then do the same here, yeah, I mean, now to just drop this to 191. You see, we almost lose 1R in the trade. Okay, so that's what we want to be aware of. So I'm not saying that I would be looking to fade CAD here, but we've run prior day's high liquidity, right? Now, if we look at our kind of setup here, and again, you don't really want to be fading stuff that has a lot of strength to it, right? In truth, guys. But if we got our triggers and we got our setup here, that's the low. Yeah, that would be our fractal low here. So we can look at this when this closes in a minute. One way we could trade this is take our displacement candle. Obviously, it would need to still displace below the low. And then within this, which we'll come back and take a look, remind me, Hans, before the end, we would then look for our 1 minute setup within there. Yeah, so we'll pop back to that. Just for now, let's go. Yearly open was also taken. Oh, boom. Yeah, massive. I still think the draw's up here, right? We are feeling this big bearish fair value gap here. Just really zooming out. Kind of really still kind of a big consolidation here, isn't it? From this higher capping the market across here. Something like that, I would say. Support, deviation, big recovery, support, deviation, big recovery, reaction, doesn't come into it, deviates, resistance, takes liquidity. Now it's back in the range. Yeah, I mean, tricky, but this is showing a lot of strength, right? So it would have to be a counter trend trade to take this on. But what Hans was just referring to is absolutely right. If you go on to your 12 month, yeah, then you can see this was 3rd of Jan. And this was, as our good friend highlights, our yearly open. Okay, so then when we go back to, say, our daily chart, do that as a fixed line, and we'll do that a bright orange or something. Yeah, we can see the yearly open's been taken out right on a daily scale, but it does look like it's kind of finding support above here. Yeah, so again, kind of pays into our theory that this thing's looking a bit hotter, but again, it doesn't mean that we can't counter trend trade this. But what I would say is just, always be very, very aware that this thing's showing a lot of strength, right? So if this really blitzes down here, we can look for displacement here, or we can look for an aggressive 1 minute entry in there, but we will definitely come back to that. Going to keep you a little bit later, guys, because we want to just cover a couple of these crypto assets. We're just going to take a quick look at SUI and then smart DEX as well. Let's add that in. I think it's on my other chart. Here we go, while we're here as well. Let's go for That one. So, firstly, with SUI, let's take a quick look on our daily scale. You're very welcome, Hans. I think you got a really good handle on this, mate. I think what you said was absolutely spot on. Tricky juncture for it, though, right? You know, across the yearly open, looking to hold it, probably going to look to push higher, but intraday wouldn't surprise me if we got a little bit of a pullback. However, we can still be patient, right, and then look for that to develop. So, what is going on in the world of SUI? Well, first of all, I love this. Love the fact that we've got an inverse fair value gap here on a daily scale. I also like the fact that price is currently delivering from a bullish fair value gap here on the daily scale. So, where's our next clean upside target? I would say, well, this is our fractal high here. Why is that? Because it's the high, didn't close below that low, and then that low was ultimately taken over here. So, draw that in as our target. Yeah, I mean, this is looking nice and bullish. I mean, again, only real sort of slight wrinkle here is that we've taken this high out. And yeah, I mean, let's pop this indicator off actually. I mean, we can see that we're still high here as well. And again, what are we doing? Delivering from a bullish fair value gap here. So we'll do that in green. Okay, well, for me, this is actually really nice and clean because what I would want to see happen here is price draw down into this. Yeah, and then on a lower time frame scale, we want to reclaim a market structure, and then we want to be looking to attack these highs. Yeah, because we've taken out all these highs around this liquidity. As long as price shows strength here, if it rips right through it, then obviously we don't really want to worry about that. What we would look for to give this a little bit of context, let me just lock these so they don't move. I'll just show you guys a very quick kind of setup idea that I'd be looking at if we target this in here. What we can see is we got a bullish breakout. We return to this bullish fair value gap. Yeah. So I just want to show you in this part here how we could look to play that. Just to show you the kind of idea of the setups that we would be looking at here. Yeah, so we can see here, we come in, we're very flat in here, but we extrapolate this across. Yeah, so this is the bullish fair value gap that we have. We come out of it, we're coming back in, we find support. What do we want to see? We want to see a clear and obvious purge of liquidity on the lows. Get our sweep just outside of our New York session, actually, unfortunately. We would have maybe got a slightly smaller scalp setup in here. What did we do? So we've come into the lows here. We haven't really got a sweep, so immediately it becomes kind of a little bit like a B setup. Yeah. We break here. Do we have displacement? We get to place displacement there. Sorry, but that is a little bit high up. What we would need to do in this particular situation, because we don't have anything clear and obvious, we've got this here, but we're getting into it a little bit higher. What I would look to do is I'd look to break this down onto a 1 minute. With inside here, we've got no choice. We have to respect the swing low that's below, which is here, and we get very, very close to be taken out here. And with this particular model, you're looking for the lowest fair value gap to enter, which is here. Long position would trigger when we re-enter here. We have to make an allowance for this swing low at worst, if not this one. Probably be looking at this one, a few points below this, to be honest. And then the issue that you face is you've got to pick out a clear target, right? Remembering we're counter trending still a little bit here. So maybe the fill of this. Yeah, coming up into this fair value gap, right, which would have been resistance at the time, so you could have targeted that. That would have been a sneaky low time frame entry, but you're talking about really low percentages here. Oh, actually, you're not. 0.85, 1.86 upside. That's a pretty decent trade, actually. But that I don't want to digress too much, but that's the kind of thing that we would be looking at, right, in terms of this. So, uh, duh, duh, duh. Now, we might not get this pullback into here, right? We might not. The session might develop and just completely run away without us. But ultimately, what we would want to see is something that follows this line, is something like this, going do, 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 do. I like this here because we're filling this fair value gap here, right? Then what you want to see is a purge. See that low gets taken out? Yeah. You want to see the high that takes the low. Look for your fair value gap in here. And away we go. So that's definitely what I'd be looking at on SUI, because it's all framed around the fact that we're taking high time frame strength. And doesn't that just look like the absolute scribblings of a madman there? Now we've got to a higher time frame. All right, but that's just to be safe, right? Because if we get down here and we break down, then we can expect lower prices. Yeah, and we can also factor that in as well, guys, right? If we get a 4-hour close below this, yeah, if we invert this from being a bullish fair value gap to being a bearish one, meaning that we've then inverted it, we'd be looking for the opposite, right? We would want to see, first of all, price close here. Yeah. Then we'd be looking for any retest of this to come into these lows first, and then ultimately to these lows down here. All right. So the madman scribblings show bullish version, which we favour because we've got a high time frame bullish bias. Yeah, we're ignoring the news for now. We're just saying, okay, as long as we get these sales before the news starts to drop, doesn't look like we're going to, but if it does, we can be in there and we can take them. And if the news tanks the market, yeah, we want to see a 4-hour close below, a retest of this, which becomes our inverse fair value gap. And then our assumption is that price then needs to pair with prices lower down, yeah, because it can't get higher. And in simple terms, it means that there's no pairing with prices higher. It means that price has no choice but to search for pairs lower. Yeah, pairing as in matching buyers with sellers. All right. And then let's look at our lovely smart decks. These guys, by the way, just to speak highly of them, have been a really, really good partner. We really, well, at the Nest, one of the things that I just have so much pride in is we take such serious care with the partners that we're with. Yeah. So you can see by here, yeah, token's been getting pummeled, so has everything. But I tell you right now, these guys are doing some amazing things, and this is going to affect the tokenomics as we move forward. So they're basically one of the first DEX, or the first DEX that approaches the fix of impermanent loss. Right now, you'll find some bits and pieces I've shared about this, but it's super exciting for the space. The more that decentralized exchanges start to come in and start to have the hold, they're all going to look like this at the moment, the majority of them anyway. But this isn't about buying this as a buy and hold asset. This is about finding a good place to get in, getting some of this built up, and then waiting for this thing to level, start turning higher highs and higher lows, because this is something that has the opportunity to go really parabolic. Now, it might do and it might not. All you can ever do when you're investing in a project, and I've invested in this personally, we invest personally in all of the projects we recommend, by the way, as a team, is you just have to go with the ones where the teams make you believe, the process, the products, everything. So I'm a big fan of this. Obviously, this looks like trash, especially on the BitGet one at the moment. The daily's not really giving us anything, although from a pure TA perspective, we can see that we're under this very skinny order block here. Ooh. There we go. So we're under that. Now I want to move to the 4-hour chart just to give ourselves a bit more context. I'm saying, okay, what do I want to see in ways of a market reversal here? So I'd definitely be looking at price running into this. So this becomes our 4-hour order block here. Okay. Ooh, text is massive. Actually, probably better for you guys to actually see it, isn't it? So again, look, now I'm down here. I know where the order block is, right? Might push up into this, but where these are adjoined, it's always better to be safe. So if I haven't got anything clear and obvious there, what do? Well, I certainly don't force anything. I just keep going down through the time frames, right? Now, if I'm looking at this and I'm saying to myself, well, hang on, if this order block, it doesn't have to be retested, but I think there's a chance that it does. Price can come back up to here. It's going to make its mind up. Their pairings for this thing to go higher. Is there the strength in it? Or is this just where people are going to offload their positions and everything starts to drop? Yeah. Well, all we're doing is exactly the same thing we've done before. And what I like about this from a bullish perspective on an hourly time frame is we've got our inverse fair value gap here. Yeah. We've now created a bullish fair value gap above it, which gives us a great position that if we're expecting higher prices, once again, we want to see price move down into this, regain market structure on the lower time frames, in which case then we've got a clear and obvious target to track here. Yes, we've got a fair value gap here, but if we're getting in down here on a lower time frame, by the time we get up to here, we're a good few R up. We can flip our stops to entry, trim a little bit of profit. And again, we're very, very conscious we're going against the major trend, yeah? So we can find the equilibrium of this fair value gap and find that as our main target. If we overcome that, flip it to support and push higher, we can stay in. If not, we can get out. Either way, we're looking a little bit more risk averse, all right? So that's what I'd look for there. If you didn't have any of that available on the hourly, you could then drop down to the 15-minute. And actually what you see here on the 15-minute is you can just kind of refine this a little bit more, yeah? So this now becomes the bullish fair value gap on the M15. You can wait for price to come down here, regain market structure, look for that nice break, and then look to trade this higher. All right, guys, so let's just close up very quickly on USD CAD. Let's see if we got anything out of this. Remember, we want to be really cautious with this one because it is running a little bit spicy hot at the moment. Okay, so we've not displaced below the low. Good Lord, look at that. We were just talking about this candle doing it when if we zoom in, look at that. It just failed to do it. You want to see a strong move below this because you want to see conviction from the market. At the moment, if the market's not showing us conviction on the 15-minute, the assumption is that that 15-minute order block is supporting price. Yeah. Now, I'm not suggesting you do this, and I wouldn't take this trade because we are high up, meaning we've taken liquidity from the highs, right? And if anything, I do feel like this could cool off a bit here. But if we did run the lows and we displaced higher, I would be looking at this high here. And if we got a nice displacement move above this, again, guys, remember, I'm not going to take this trade. It's just too high risk for me. We're too high up. But if we displaced above that, I would then be looking for a fair value gap left in the displacement and then looking to trade that higher. All right, guys, that was a really nice little mix session. I loved covering the FX stuff with you all. As always, just a huge thank you to everybody that joined the stream today. I'll try and get through everyone, but Nitpar, MM, Erica as well, Hans, guys, always here. Our lovely Kelly Barker as well, another one. Craigie boy, always involved as well as we go through. I know we had a few other people here as well. We had Mert who popped in, our lovely Whack who's always here as well, which is brilliant to see. I think we had a couple of other people sneaking in. Learning, that was it. Saw you slide yourself in there as well, mate. Fantastic. Thanks so much for stopping by, guys. And obviously anyone else that's listening that I haven't mentioned, I can see we've got quite a lot of viewers today. Never be afraid to kind of jump in, guys. Be part of the conversation. You'll see a lot of these people. We've got a fantastic community we've built over the last few years. Really knowledgeable people, but everybody has to start somewhere. Now, on Monday, just thinking about this, I won't be here with you on Monday. I'm really, really sorry. It's bank holiday, so we've got a public holiday here. What I will do is I will put maybe a little bit of a longer session on the Wednesday, and something else that I'm going to start introducing maybe next week or certainly over the coming weeks is opening up a voice chat for you guys and maybe some live streams, and let's trade some of these PM sessions like the New York AM session, London PM session together, and we can look at live setups. We don't have to do any live trading, but we can certainly run the setups together and do it like a live trading course. I think that could be really, really cool. But yeah, big shout out, guys. Kelly, yeah, loads of love to all you guys. Have a fantastic week. Have to watch this back. Kids have been going crazy in the background. Good. Well, you let them know that, Daddy's got some important work involved if they want to go to those good universities. All right, guys, look, have a wonderful weekend. Hans, you're very welcome, my friend, as are you all. Love being here with you as well. Looking forward to more sessions again. Remember, we got news-driven events coming up. They're going to be dropping in about an hour or so. We can see live on screen at the moment, we look like we're getting that kind of displacement move higher, which is why it makes sense to not jump into those short trades just when we run liquidity, right? Let's see how this plays out. Like I said, I'm not too keen on jumping on board with this today. We've got news events coming up, and also as well, it's just a little bit high doesn't mean that it won't work. Okay? Thank you, thank you, thank you. Have a fantastic week and an even better weekend. I look forward to catching you guys around the next week. Remember, I won't be here on Monday, but I'm available on Twitter. You can come and grab me over at the Nest anytime. Have a great week, guys.